right? I am recording. This will be recorded. This will be uploaded. You will get this as soon as it's done rendering, right? But like I said, make sure you guys ask me questions on the way. I will make sure you guys know exactly how to trade, and will answer as many questions as I can. So, what is impulse correction continuation? What is this? Right? A lot of people have issues with figuring out how to trade, right? Because it's crazy that people don't know this. People already don't know what trading is regardless. But to not know what impulse correction continuation means is a whole different ballgame, right? Somebody tell me what an impulse is in the chat. Somebody tell me what it is. Let's get it, let's get it, let's get it. What is an impulse? Impulse is when there are huge candles that happen in the market or news, or that there is a huge sudden movement in the market. Okay, sudden reaction, strong up or down movement, initial move in the market, sudden change in price, strong move up or down. Correct, correct. Sudden move. Yep. That is an impulse, right? This is an impulse. That is an impulse. Somebody tell me what a correction is. What is a correction? Pullback. Okay, pullback. All right. Retracement. Consolidation. When the candle's going to fill gap when it attempts to correct the impulsive move. Yep. That is a correction, right? You can tell that this right here is a correction. You had an impulse, then you had a correction, right? This is your impulse right here. This is your correction. This is your correction, right? Now, how do you know it's a correction? Because the market moves in waves, right? If the market moves in waves, then if this was the straight line, this would be the wave, right? If the market moves in waves, the wave, I call this the wave, the hump of the wave is the correction, right? And as soon as it breaks out of the correction, this would be considered the continuation. Does that make sense? Put a 2 in the chat if that makes sense. Put a 3 if it doesn't make sense. All right, so I want to break this down even simpler, right? The market goes up, down, up, down, up, down, up, down, right? So the market goes high. I'm just going to put an H here. The market goes high, low. Higher high. I'm sorry. Tripping. Market goes high, low, lower high, right? Lower low. Lower high, lower low. Now let me ask you guys a question. How did price get here? How did this price get here? Impulse, continuation, impulse. No, not what it is. Not what it is. How did this low happen? Yes, break a previous low. Correct. In order for a low to happen, you have to break this low right here. In order for you to create a low, it has to break the previous low. It has to break it. It has to break here. In order for another low to occur. It has to break this red circle in order for this purple circle to be created. That's how you create lows, right? But the market doesn't just drop all the way down. It doesn't go straight down. It doesn't impulse all the way down. The market has to come back and create pullbacks or retracements before it continues in that direction. Does that make sense? Put a 1 in the chat if that makes sense. Put a 2 in the chat if it doesn't. The market has to come back. Yes, the market has to come back and make a pullback before, if we're on a downtrend, the market does not just shoot down. The market has to pull back in order to continue going straight down. Okay? For the people who put down 2, tell me why you don't understand. I want to make sure that you guys understand what I'm saying right now. I want to know why you don't understand. I want to actually help you guys out in figuring out why you don't understand. Put in the chat what your question is. What do you mean why it has to break the lower low, right? In order for a low to be created, it has to break another low in order for it to go lower, right? Let me explain why. When this was up here, so before a low is created, where does it start, right? A low starts from a high. A low cannot be created unless it creates another high. Unless it creates a high, right? In order for a low to be created, there has to be a high, right? So if I'm in an impulse and then I pull back, in order for me to be able to create a low, it has to break another low. So if I'm right here, I have to break this low to even consider this to be a low. So you have 2 types of lows. You have lower lows and similar lows. Same thing with highs. You have higher highs or similar highs, right? If the market doesn't break this low, then it's going to create a similar low, which is called a what? A double bottom, right? But if it breaks the low, then now it's called a lower low. Right? So it's the same thing for highs. If the high cannot be broken, right, then it's called a double top. But if the high is broken, then now it's a higher high. Does that make sense for the people who put it 2? All the people that put it 2, put a 1 if it makes sense. If it doesn't, put a 2 again. okay? Because I want to make sure you guys understand what this means. Now, when it comes to a correctional move, right? When it comes to a correctional move, right? I'm calling this right here, calling this a wave. This is your wave, right? Like I said, the market does not just shoot down. The market does not do that, right? The market has to retrace. A retracement is just a big pullback, a huge pullback, a longer pullback, a possible reversal, right? The market has to reverse. I mean, has to pull back, right? Market has to pull back. In order for price to continue in that direction, it has to pull back. And that pullback equals a correction. It is a correction. Does that make sense? Put a 1 in the chat if that makes sense. Put a 2 in the chat if it doesn't. I want to make sure all of you understand what I'm saying so far before I get all technical with this. Good, there's no 2s. Okay, good. So if we put this with actual price, right? If we put this with actual price, impulse, right? This is your correction. This is your continuation. So you only lose money for not having enough to withstand pullbacks? Yeah, pretty much. That's how people lose. So once the market pulls back, does it usually continue in the same direction as the impulse? Correct. And this is what I'm about to say right now, right? The continuation is always 100% of the impulse. Let me explain what that means, right? If this was my pullback, right? I want to break this down as simple as possible. This is my impulse. This is my impulse, right? This is my correction. The continuation phase, it's supposed to be right here, right, is always 100% of the impulse. The continuation is always 100% of the impulse. I just explained it. It's I don't want to butcher your name. Latanya Garrett. I'm just gonna say Garrett. If you have a question, Latanya Garrett, I don't want to butcher it. Ask me the question, which you don't get. The continuation equals the impulse. The continuation I'm gonna butcher that. The continuation equals the impulse. It's 100% of it, correct. So if you get a correction, just measure the impulse and you know how far your take profit is. This was your take profit. And most likely, your take profit is another support or resistance level or demand level 9 times out of 10. 9 times out of 10. Right? So, and that reimpulse is the continuation, correct? Correct. Was continuation the same as impulse correction? What do you mean? What do you mean? Can you show an example from the impulse we identified on the chat? Yeah, I'll show you. Absolutely. No problem there. So, this is your impulse right here. You see how straight and narrow and steep this is? Your TP is always your support and resistance level. Your stop loss is always above your previous low or high. Your impulse is always a straight line. And let me show more example. Let me show more of an example. This is an impulse. This is an impulse. This is an impulse. This is an impulse. Right? This is an impulse. Right? Just identify them. Right? Identify the impulse. This is on a downtrend. This is an impulse. This is an impulse. This is an impulse. This is an impulse. The impulse and the continuation is the same thing. It's the same thing, right? This is the impulse. Just identify them on the chart. Like do that as your homework. How do you know the impulse is finished and won't continue? The impulse, how you know if it's finished is when it starts correcting, when it starts pulling back. And this is to determine which way the market is going and is it only usable for day chart. It's usable through any time frame. Right, so if I'm on the hour right now, I'm gonna go on the 4 hour because I just like how it looks. I'm on the 4 hour. This is your impulse. This is your correction because you see the pullback, right? Impulse, pullback, continuation, pullback, continuation, pullback, continuation, right? Anytime it's against the current trend, anytime it's against it. If we're on a downtrend, right? Anything against the downtrend would be the impulse. So any uptrend that you see within this, let me draw this as a trend line, right? If I draw this as a trend line, anytime, if it's a downtrend, it's your impulse or continuation. Anything that's the opposite of the actual trend is your pullback, is your correction, right? Your support and resistance level is where you put your TPs, and your stop loss is is below or above your higher high. Is that regardless of all the little pullbacks and retracements in the move? Any smaller pullbacks that you see are corrections on a lower time frame. Or corrections on a lower time frame, right? So this would be your impulse, maybe on the 1 hour. This will be your correction on the 1 hour, and then this will be your continuation on the 1 hour. But you still have this huge impulse on the 4 hour, correction on the 4 hour, and then your continuation on the 4 hour, right? So what I'm saying is, even though there are so many moves, so many patterns inside of bigger patterns. Are you getting what I'm saying? So this is a 4 hour impulse, correction, continuation. But you see here, right, on a smaller time frame, on the 1 hour, right, you see here on the 1 hour that there are smaller moves in between here. You have this move, and this move, right? But on the 4 hour, this was included. This was all included. And on the 15-minute, right, you have smaller moves as well, right? So you have to look at the market and simplify it in the most easy. It has to be easy for you. Anything that looks small is a lower time frame move. Anything that looks small than the time frame you're looking at, excuse me, is a lower time frame move, right? So this area right here is a small pullback compared, right, to the areas that I've already drawn in yellow. That's a smaller time frame move. That's why. Let's see. How do you tell if it's a pullback or a reversal? So the difference between a pullback and a reversal, a pullback, okay, so like I was stating before, right? Boom, boom, boom. Actually, let me make this bigger so you guys can actually see what I'm talking about. Right? Who is this? She is prosperous. Stop putting plus signs. I don't know why you keep doing that. Okay, so let's say you have this impulse and now you're making this correction, right? In order for a reversal to happen, actually, let's do this, right? Let's start here. In order for you to know that it's a reversal, it has to break. And we're talking about, let's say we're on a downtrend. In order for you to know if it's a reversal on a downtrend, and doesn't matter if it's an uptrend as well, it has to break a high in order to create another high, right? It has to break a low to create another low, right? So we already created our low because we broke it already here. So in order for us to break and reverse, it has to break this high, the recent high, in order for it to reverse. Now, a pullback means that it could not break this high. And all it could do is stall and consolidate in this area for a time and then continue back down. Does that make sense? So for you to know and I want to put this simply, how you know if you're reversing or not is you have to look at the previous high. That's why I identified this high, right? So I would have to break this, right? I would have to break this, retest it as support, and then take off. That's how you know it's going to reverse. In order for you to know that it's going to reverse, it has to do all these three things. It has to impulse, break the high, the recent high, retest that high, then take off. That's how you know. But the first thing you need to identify is the break. Does that make sense? Because we already, then you have to look for the retest. Because we're looking for the reversal, right? But if it doesn't reverse, then all it's going to do, right, is just stall in the area and retest the last resistance, stall as in consolidate in this area, move sideways, and then continue back down. And then in order for this low to occur, it has to break this low. But let's say it doesn't break this low, right? And it stopped here, then consolidated. So that means, so what that tells me, right, is that either it's going to consolidate more to the side and continue dropping, or it's going to consolidate here and move its way up and break this high instead, right? And as soon as it breaks that high, right, then you have to retest it again, and then you have to have a takeoff. Right? That's what has to happen, right? And then if you guys haven't realized already, this area right here formed a double bottom. Right? That's what usually happens when, that's what you have to look at when you're trading. You have to literally look at this as if you were trading it. You have to look at this like I look at this as the market is in a straight line, right? So if I'm looking at the market, right now, you can see what's going on, right? Just draw it out. There's nothing wrong with drawing it out. I want to tell you guys this. There's nothing, like, draw it out, right? You have your impulse, right? And then it started stalling here. So you have an option. Either it's going to break this high or break this low. That's the only option you have, right? So if you know that you only have two options in the market, right, then you need to make a decision on what exactly you're going to do after it moves there. You have to react to it. So if you're in the pullback stage, you need to be like, okay, I'm sitting on my hands and waiting until it breaks one of these two areas, right? And then as soon as it breaks that, right, as soon as it breaks and closes below here, that's when you can enter, right? So you had your close, your candle closed below this low here, right? It closed here. I'm going so much like more. There we go. It closed here. So technically, you could have entered into a sell, right? And as soon as you entered into a sell, your entry was here. Your stop loss is around here. And you take your trade and you win about 200 pips, 190 pips, right? And then you just do it again, right? Okay, boom. This was my impulse. This is my correction. I only have two options. Either it can break this high or it can break this low, right? I'm going to change this to a different color so it won't confuse you guys. It can break that high or it can break that low, right? So you only have two options. You only have two options to go. How would you calculate the TP? The TP would be, you always look left for your TP. So if you entered on this green arrow, you look left and you identify what support or resistance is next. So this was your next support, this was your next support, and this was your next support. All three of these lines would have been your TP. And you see, after I identified the next support, it hit it perfectly, then corrected, then continued in that direction. How do you sell if it's a pullback or reversal? Oh, I just explained that. Right. So pretty much answer your question, if you're in a pullback, you wait for one of your highs and lows to be broken and take it. Wait for it to close and take it. So it continued down. So we look for wherever low that was broken, right? Whatever low that, so this yellow line needs to be broken. So you had your entry here, stop loss somewhere around here, and you pretty much took your trade and got about 100 pips out of it. Again, it's that simple. It's that simple. No need to overcomplicate it. Right? There's no need to overcomplicate it. So when you're trading, all you're doing is identifying your correction and anticipating and reacting to what the market does. Right? That's all you're doing. Can you do an example on the 30-minute? Sure, it's the same thing. Let's go on an uptrend this time. Right? This is current price right now. So this is my trend line. So look at how price, right, comes back to the trend line. When it comes back to the trend line, that's your equilibrium. That's your pullback. That's your correction. Every single time. Right? So every single time it pulls back. That's when you identify your high, and your low, and you make a decision. Okay, well, if it breaks this high, I'm entering. And if it breaks this low, we'll see. Because the reason why I say we'll see is because we're on an uptrend. Right? If it breaks a low, then I'm going to see what's going on. Okay, am I in a downtrend? In this case, the market was moving sideways for a short period of time. Right? So the market was moving sideways for a short period of time, and then we had this breakout, faked me out, created an impulse, created a correction or a bullish flag, and then we're in this area, and we just need these two places to break. Then I would have to think about what to do next, right? So pretty much you have to break things down in a simpler way, right? So as soon as you get the correction, you identify your high and your low, and you react to whatever happened with your high and your low. In this case, you got about 30 pips before it went back to the trend line. Because when you trade, it's always going to go back to the trend line. And you're identifying the support and resistance lines for 1 hour for how far back you go. It's a preference. Excuse me, I'm sorry. It's a preference on how far you want to go back. As long as it's recent, right? As long as it's recent. As long as it's recent. So in this case, I went all the way back here. I just want to go back as far as me identifying the amount of touches it is, the amount of touches it's happened or touched, and identify if it's a strong level or not. I'm not about to go all the way back here to identify a low. That's not about to happen. It has to be within, I say within 2 years. I really would say within, like if you want to really, no, not even 2 years. Within a couple months. If that answers your question. Within a couple months. Let's see. When you analyze off of a 4-hour time frame, do you take the trade on the lower time frame? Yes. How would you calculate the TP there? I already answered that. So why do we need to know support and resistance if we understand impulse flexion continuation? That's a great question. So the reason why you need to know is for your TP. For example, we're here, right? This is where we are currently right now. What we need is a break of this resistance, right? That's what we need. So as soon as it breaks this resistance, we need to know how far or our next supporting resistance is to know our TP, right? Our next TP is right here. Next one after that is right here, right here, right here, right? So I already have these things mapped out. Like I said, we're right here. As soon as it broke, it hit directly in that next support and reversed and made a pullback. Boom. As soon as it broke this area as well, right? You're holding this trade currently right now. You were up about 30 pips. Now you're up about 7. And then you would be holding it until it hits your white TP, to your next TP or your next resistance. So do you jockey between the 4, 1 hour, and 15? My main time frames are what's here on the left-hand side, the weekly, daily, 4 hour, 1 hour, 30, and 15. My entries are from the 4 hour to the 15. Daily and weekly is just for analysis. Okay, I answered those. Let's see. Who is this? I want to know who that is. I definitely want to know who this is, because they're wild. All right, so currently right now, we are in a pullback. The price always comes back to the trend line. Let me repeat that again. Price always comes back to the trend line before it comes up. It's not going to happen immediately, but it's going to come back to the trend line eventually before it moves up. And after it comes back to the trend line, after it moves up, it's always going to create a smaller flag next and move up. Smaller flag next and move up. Then it's going to come back to the trend line and then reverse again, right? After a big pullback like this right here, there's always going to be a smaller pullback where it doesn't fully touch the trend line and then a move up, right? That's usually what happens. Let's go on a higher time frame. You don't get it to the trend line always, but it comes close. Yes, correct. Exactly. Exactly. Right? So if this is my trend line, price always comes back to the trend line. In this case, this formed a bigger flag on a higher time frame. This is not even a 4 hour time frame flag because it's bigger. That would be more like a daily flag, right? Like I said, there's smaller and bigger time frame flags. So this will be a correction and a continuation. Ooh, then we're going to go on a 4 hour, right? And then on the 4 hour, this would be a 4 hour impulse correction, continuation, correction, continuation, right? Then on the 1 hour, right, you have impulse, correction, continuation, correction, continuation, correction, continuation, right? And we can do this all day. This is how you know the difference between a higher time frame and a lower time frame support impulse and correction, right? That's how you know the difference. Do you see how on each color, the green is the 1 hour, right? The green is the 1 hour, right? The yellow is the 4-hour. And the blue, the turquoise, is the daily. So you see how on the 1 hour, you get more impulse correction continuation, right? That means that's more ways for you to enter in and out of the market, more ways for you to make more money, right? Or make quicker money. On the yellow, it takes a little bit longer to create the impulse correction continuation. I'm going to call this the golden rule. It takes a little bit longer to create the actual pattern for you to actually get in the trade, but you'll catch a lot more pips, right? And then on the daily, you see that it's a little, this huge impulse is the daily. But on the lower time frame, you see you have a lot more moves. So on the daily, you have to pick how you want to trade. You have to know what type of trader you are, right? When you say broken, you mean close below, above or below? Correct. So you have to pick your poison. You have to know what exactly or how exactly you want to trade. How do you take all the lines off the chart? You just click this trash can on the left-hand side. It's the last one on the right-hand. I mean, on the left-hand side. Of course, we gotta be giving y'all the sauce, man. Y'all in here getting the sauce today. What kind of trading is SK5? What do you mean? What kind of trading? What does that mean? Are you referring to scalping, day trading, swing trading? SK5 would definitely be a scalping strategy. That answers your question. It's not a long term. If the I always drawn underneath the trend line. The trend line. I don't know what you mean, Sim. I can't really understand your question. If it's on a downtrend, right? If you're on a downtrend, you draw your trend line above price. If you're on an uptrend, you draw your trend line below price. If that answers your question. Trading on the daily takes more patience. Correct. Correct. The reason why you draw your trend lines like this is because if you're on a downtrend, the only option you have is to go up. And in order for you to know when it's going up, it has to break the trend line. And the same thing for when it goes down. If the only way for you to know if it's going to reverse into a down, if you're going up, the only way for you to know if it's going to go down and for you to know when it reverses, it has to break the trend line. Hopefully that makes sense. All right, cool. Oh, so how does this relate to your trading? Are we going to look for a live trade using RCC? Oh yeah, we always do this. Always do this. Let's see if we can find some right now. See if we can find a little something if the market gives it to us. Is the market going to give us a trade today? I don't think so, you guys. I don't think it's going to give it to us. When it comes to trading patterns, right? Is Awanda better than MetaTrader 4? Awanda is a broker, not a platform of trading MetaTrader. It's not MetaTrader 4. When it comes to patterns, right? For example, double tops, double bottoms. You know, you have the correction, the ICC and everything, right? You want to trade in the most clearest pattern possible. Let me explain. GJ, right? GJ. See, this was a 4-hour flag, right? If I'm, let's see. Let me go ahead and draw this trend line really quick, right? This was a 4-hour flag, right? And it was a clear flag. So I would take this. This was a 240 pip move, right? This, let's see if I can find an ugly flag. GJ does pretty well with flags. This wouldn't be the best flag. I wouldn't trade this pattern. Why? Because of the fact that it has to be pretty. You want to trade pretty patterns because the better looking the pattern, the better the move. The easier also for you to enter into the trade. So with GJ, right, this was a beautiful bullish flag, which is a correction, right? So naturally, as soon as it broke this high, I would enter into it, enter into the trade. So as soon as it broke it here, you went 70 pips in profit automatically. So your entry was here, your stop loss was around here, and now you know that you can go, now you have a comfortable trade. Does that make sense? You have a comfortable trade. And in order for you, and you know, where people are like, where's your TP? Where's your TP? It's by next support and resistance. Right? So you have 150 pip move, or if you want to go off the supply, you have a 336 pip move. So that means for the people who are scalping, right? For the people who are scalping, you can scalp 200 to 300 pips, right? The thing is when it comes to scalping and you know something's going 200 to 300 pips, you're looking at it so closely that you're not understanding the pullbacks that is going to happen. If you're scalping a long distance move in a buy, you don't need to be worried about the sales. Do not sell. The issue with that is that you're going to lose every time. If you're scalping a long distance strategy, a long distance move in a buy, the only trades you need to be taking are buys. If you're scalping on a downtrend, sells, the only trades you need to be taking are sales. Why would you be taking any other trades if you're in the direction that you need to be in? Just want to put that out there. Can you please go over different flags? So there's really not, there's really not much when it comes to different flags, right? Flags pretty much look the same. You have this flag, they're kind of like ascending channels, right? This is a descending channel, right? This one would be more of like an ascending wedge, right? Those are like, and some of them are like asymmetrical triangles. Those are pretty much the types of flags that you'll have. There's really not an over excessive amount. Like this was an ascending wedge pretty much in this case. So like there's not much into it. Is this going to be on the UTH YouTube recording? I don't know if it's going to be on YouTube, but definitely going to be recorded. All flags are corrections. Yes, they are. Yes, they are. So, I mean, this was pretty much what I wanted to show you guys today. Is like when I was showing you guys the flags, or I'm sorry, not the flags, the how to trend trade, or how to trade in the most simpler way possible, and how to look at the market. You want to simplify the market. What chart should we use scalping? Scalpers use like the 5 and 15 a lot. When the flags get smaller, does that mean there will be a major move for the flagpole? No. Okay, so the smaller the flag usually, not all the time, means that it's going to be a smaller move. The bigger the flag, the bigger the move. So you will win every time with ICC and support and resistance. Yeah, of course. That's the only way the market moves. That's the only way the market moves. The market only moves impulse, correction, continuation, and support and resistance. That's the only way the market moves. It doesn't move anywhere else. It doesn't move like anything else. There is no creation of another form of patterns. It only moves like that. There are different patterns in the market, but how the market moves only moves like that, if that makes sense. Right? It only moves like that. I can show you all day, every day, how the market moves. I can identify corrections and flags all day. Right? You can keep identifying these. These are easy to identify. You keep identifying, and the greatest thing is you'll know when it reverses too. What indicator do you use for confirmation? I use the MACD and a moving average. I use a MACD and a moving average. You guys probably saw it on my screen already. This is the only thing that I use. I don't use anything else. I use it in conjunction to get into trades. You're not even using indicators, it's straight naked charts. Yeah, I don't really use indicators like that. The only indicators I use are these, and I barely probably even use the MACD, not the MACD, the actual EMA. I barely use the EMA. But I definitely use the MACD to get in my trades earlier. But you don't need to. I told you, as soon as it breaks structure, it automatically gives you 10 pips. The MACD that I have is on TradingView. So if you go on indicators, built-ins, if you click built-ins and search for MACD 4C, it's the first one by Squatter. That's the one I have. Yes, it's a 50. And my MACD is default. I don't change any other settings. How long have you been trading? A year, as of last month. A year and a month now. Do you have the paper subscription? I'm actually paying for the subscription today, but I don't really need it. It's just I'm probably going to pay the subscription just because I want to test some other strategies out. Other than that, I don't really use it. I don't need to use it. But, I mean, I've heard from Doc that all you need is RSI. If you know how to use it. When it comes to indicators, they're all subjective. All indicators do the same thing. You use market structure and then use the indicators in conjunction with your market structure. All you need is market structure. All this other indicators is unnecessary. You don't need an excessive amount of indicators to tell you to get into a trade. What you need is market structure, which is what Spiller and I are actually teaching. The thing is with the SK5, is that it's so simple. Yes, they're marked. Yes, Jay Finney, they're market structure. The only thing, the SK5 is so easy. The SK5 is so easy, you don't need to use market structure. Because you have the Ichimoku and the RSI and the money flow, and you got the MACDs, and then you have EMAs, and like you got so many, you have so much stuff on there that it does the market structure job for you. Well, in the beginning of my journey, I was told only the MACD and the RSI. So first beginning, it's confusing. Of course, it is confusing. That's why I stress market structure. Learn market structure first, and you'll see how incredibly simple it is and how fast your account will grow. Use market structure in conjunction with SK5, and you'll double your account quicker than you ever did in your life. How long does it take for your trades to hit TP when you're trading on the 4-hour with your strategy? Sometimes I think I exit the trade too early. It depends on the pair. When it comes to trading on the 4-hour, like for example, when I called the trade on EA, I entered here. This was my entry was in here. I just got out yesterday here, right? So it kind of depends on where your personal TP is, and how long and how patient you're willing to actually stay in the trade. Does that make sense? I stayed in for a week. I knew it was going down there, so I'm able to stay in it longer. How do we get the SK5? You got to be on these sessions. That's how. You got to be on this SK5, ETH SK5 TV. Do you think the stochastic is useful? When you use it correctly, yes. So do the markings you just showed, yes, that's market structure. How do I review the call? I'm going to post it. I'm going to post it in UTH signal service. Yep, they're going to be coming out with the schedule very, 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 very soon. Are you using only 4-hour and long-term trades? Yes, I only do long-term trades. I don't do anything else. I only do long-term trades. I will enter on a lower time frame, but I'm still holding it like I'm taking a trade on the 4-hour and daily. Can you go over what makes a valid support and resistance zone? Yeah, of course. So what makes a valid support and resistance, let's just go off. Let's go off the pair I haven't touched. Let's see, NZD, USD. I don't really trade that much. Oh, it went in my direction. A valid support and resistance level is when the market is when a trend line or a zone. So two or more touches is a valid trend line. 3 or more touches is a confirmed trend line. 4 or more touches is a breakout. So as you can see here, you have 1 touch here, 2 touch here, and then after you have the 3rd and the 4th touch here, it broke out. Right? You had all these touches in this area telling you that this was going to break out to the downside. Or it was going to break out anywhere. Right? So this made this valid to put this trade in. So if I were to take a trade down here, right, and it broke and closed above here, my trade would have been, my entry would have been here, stop loss somewhere down here, and my TP would have been up here with this white line because this was the one with the most touches. Right? Because this has the most touches, this would have been my next TP. Then after that, I would look for more touches. Right? This would also be my next TP because you have a touch here, in these two touches here, then I would look back and look for more TPs. This would be my TP. This would be my TP. This would be my TP. Because you have two touches here, two touches here. The only thing you're doing when it comes to TPs is just looking left and seeing two or more touches. That's the only thing you're doing. Where do you learn market structure? From me every Wednesday. What's going on? I'm learning to trade. Holding for a week seems so long. Are you more profitable that way? Me personally, yes. I used to scalp back in the day, and it didn't work out very well. It just wasn't the move. So I was like, personally, I also don't want to stay at my computer and stress over, you know, in and out, in and out, in and out, in and out, in and out. I don't like going in and out. I'd rather enjoy my day, go about my day, and just occasionally look at my trades. I'm not in stress anymore when it comes to trading. I feel like when you're scalping, you have a little bit more stress on you than you should have. Can you explain that one more time? TPs are resistance. Oh, you answered the form. Okay. Support and resistance levels are your TPs, right? Stop losses are your recent low and highs. Be clear, would you have to go to a smaller time frame? Oh, for this one? Absolutely. I probably would have. I'm on the 4 hour, so I probably would have went on the 1 hour for this entry, maybe even the 30-minute. In that case, if identifying a retest, will it always be clear, or would you have to go to a smaller time frame? It depends. So when it comes to a retest, like I said, there are different time frames of everything, right? You have like different time. You have bigger patterns, which is more like on a 4 hour and daily, and then you'll also find that you'll have patterns within that pattern on a lower time frame. So when it comes to a retest, right, you have to clearly see it. You have to clearly see it on that time frame, right? So I clearly know that this move right here clearly retested this area. So I know this is a 4 hour retest, and then you had your move down. You have a small support and resistance levels in here. I can't vividly see that there probably was a retest in here and drop, retesting here and drop, retesting here and drop. I can't vividly see that, right? It needs to be clear on the time frame that I'm in. If it's not clear on the time frame that I'm on, then most likely it's a lower time frame move. Okay, so that's usually how it works when it comes to identifying a retest. It has to be, if it's a smaller, in order for you to know that it's a smaller time frame, in order for you to know that, you have to see, just put it simply, you have to see clearly on the time frame that you're on. If you can't see it clearly, then it's most likely a smaller move. If it's bigger, if the retest is bigger, it's most likely a higher time frame move. Does that make sense? When you make your resistance lines, how do you know when some of your TPs are going to break? I don't. You'll never know when your TP is going to break. What I do is, as long as it's hit, or if it's around 5 to 10 pips of my TP, I get out. And if it breaks it and retests it, I'll get back in. What's your favorite pair to trade and why? All my pairs on the right-hand side are the pairs that I trade. It varies every week on what my favorite pair is, because I have to have my favorite setup, right? As long as I get a correction or a bullish flag or bearish flag, that's my setup. So right now, if my favorite pair right now is USD Tri, as of right now, because it's a perfect flag. It has to depend on the setup, right? Right now, USD Tri is my favorite pair as of right now. And GJ is my favorite pair as of right now because you have a clear pattern of what you're looking for. As long as you have, if it's a clear pattern, if you have a clear pattern, then there's no reason why you shouldn't take it. That's what makes my favorite pair because it's clear. This is a clear bullish flag, a clear bullish flag, a clear correction, not consolidation. This is a consolidation. This was not clear enough for me to take. I didn't know when this was going to drop, right? I need to know easily that I can get in this trade and make money. That's what makes it that's what makes a favorite pair is when you can easily find a pattern and say, oh, this is looking nice. Definitely getting in this. That's how I know it's my favorite pair. Oh, USD Tri is looking nice. Definitely going to enter into this trade. That's what makes it my favorite pair, if that makes sense. I might need 1 or 2 more of these before I'm making noise in the market. Haha, our flags retest. Correct. Yes, they are. On a buy is your TP and higher high. And then on the sell is your TP or lower low. Yes. Can you repeat where you place stop loss and TP one more time? It breaks out and closes about it below the group. About it below that you would enter a buy or sell below. I use Hugo's way. What trades am I currently in? I am still holding Euro NZD from last week and GJ as of right now. Let's see. Can you repeat the stop loss and TP? Yeah, I'll repeat it for you. Okay. So let's go over this one. Perfect. So let's go over this real quick. Definitely looking to take Euro NZD, just letting you guys know. Clear pattern. My name is Marcus Turner. When you see on UTH, when you see Chart Slayer, that's me. Definitely me. Let's see. Okay, so let's say I took my trade here, right? Let's say I took my trade here. My stop loss is always, because I'm in a buy, is at my low of my recent low. So if I were to draw this out, this is my high, this is my low, and now we're moving up. So if I took a trade here, my recent low is my stop loss before we shoot up. Does that make sense? My TP would be my next support and resistance. So my next support and resistance would be here, 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 and here. That's my next support and resistance levels. So that I'm looking to take TP here, 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 or looking to secure some profit in these areas. So let's say we're in a downtrend, right? Let's say we're in a downtrend. And we've identified this flag here. Let's say I entered here after it broke structure here. It broke structure here. So I entered here at the close of the candle. My entry is here. So that means my stop loss has to be at my recent lower high. My recent high on a downtrend is here. So that's my stop loss, which means that I stay in the trade until it hits my stop loss. That means I secured 60 pips before it hit my stop loss. That's a good trade. You can't get nothing wrong with 60 pips, right? And you have to be patient. The issue when it comes to trading with you guys is that, because I've done it plenty of times, it'll get like right here. It'll get in this area like 2-3 pips away from your stop loss, and then you'll freak out and get out. You see what I'm saying? You don't want to do that. Wait for it to bust through. Just wait for it to actually hit your stop loss. When it hits your stop loss, and I'm doing this on purpose. When it hits your stop loss, get out. I put my stop loss in. That's why you have it. Because what happens is it'll shoot up, come 2-3 pips away, and then go in the direction. You're like, dang, I knew it was going there. Because you weren't patient. Be patient. It doesn't matter. Let it hit your stop loss. Let it hit your stop loss. It doesn't matter. You entered here, your stop loss is here. And it didn't even come anywhere near your stop loss. It actually started consolidating and gave you pips along the way before it actually went up and hit your stop loss. Then it went back down again. It actually hit perfectly in your stop loss and shoot it down. It hit that demand zone and then, that supply zone and went down. That's exactly what happened. So you got to be patient. So where would you put your TP in that cell? Look left. If I look left, my next TP would be here. I probably would have been taken out, but you have to also know that I would have secured profit along the way. So I wouldn't have lost this trade. I would have secured profit along the way. It's that simple. Just secure profit. Yep, challenge stop. Let's see, drop IG name. Oh yeah, of course. My Instagram, for everybody that does not know, this is my Instagram, Mark 𝓣𝓱𝓪𝓷𝓴. You guys make sure you post on Instagram. I'll repost all of them. It doesn't even matter what it is. Repost if you wanna shout me out, repost it. It's cool with me. So for support and resistance, 2 touches make valid, 3 and confirming signal, 4. Yep. This is my IG, you guys. Start deleter ending oscillator. Appreciate you. I'm still having a problem getting in. Stevenson said your USD buy after broke flag. I got in when you cross up. It's still negative. Yeah, you're gonna be negative for a minute. Be confident in your trade. It hasn't hit your stop loss. I know because GJ is the same way. It's okay that GU hasn't moved yet. GJ hasn't really moved yet. It's okay. Just hold it out. It'll shoot that 300 pips or 200 pips. Just hold it out. Put your stop loss in. If it hits it, cool. Just wait for another entry if it hits your stop loss. But it's moving. It's going to move up. Oh, you're welcome. Then it will reverse into your TP. Yep. That's why I'm having problems. So where would you put your TP? Oh, I already answered that. All right, cool. So yeah, you guys definitely follow. If you guys have any questions, you need to DM me, whatever the case may be. I'm always going to reply. Okay, it doesn't matter what it is. I'm always going to reply. I try to read as many comments as possible. Is there ever a time when price doesn't retest after breakout? It always retests. It might not retest on the time frame that you're currently on, but it always retests. It might retest on a lower time frame. It might have retested on a 5-minute, even though you're on a 4-hour. The thing is, the retest always happens. It just might take a while for it to actually happen on the time frame that you're on. So if you're on a 4-hour, it's going to take some days for it to retest on the 4-hour. But it's surely going to retest on the 1, 5, 15, 30, and so on. It's going to retest. But yeah, of course, you guys hit me up on Instagram, DM me. I will answer. You guys follow me on Instagram. I want to make sure you guys get the best training possible. I want to make sure, yes, it's recorded. I want to make sure you guys are getting all of the sauce. My Instagram is @Mark 𝓣𝓱𝓪𝓷𝓴. It's on the screen, actually. I also put it in the chat as well. This recording will definitely be available. You guys definitely put it on your story. Let me know what's going on. If you guys have any questions, let me know. I want to most definitely shout you guys out for being on this call super early. You guys are the truth. There was about 200 people on this call. That's insane. How do you know how many pips a trade is going to move a day? Okay, so I'm gonna give y'all. That's the sauce right there. That's something. This is how you back test. This is how you back test. If you go to indicators on TradingView and type in sessions, if you go and click sessions on chart, okay, sessions on chart. If you click that, right? Let's take this off. Sessions on chart, right? These colors pop up. If you go to this, if you go to the settings, and what happens is you have different colors. It shows you the run in the London, and then it shows you the run in New York, right? When I mean run, it shows you the pip. You can count the pips. So in New York session, like we are in right now, every New York session, this has gone 50-something pips. This has gone 50-something pips, 50-something pips, 50-something pips, 30 pips, 30 pips, 12 pips. What you can do is you can go back and count how many pips it is, and you'll know the average, saying pretty much, oh, well, Euro USD average goes 40 pips every New York session. Meaning that you know minimum that Euro USD is going to go 30, 40 pips. That means you can for sure scalp 10 to 20. Right? And now let's go to the London session. You know, in London session, this is 80 pips, 30 pips, 23 pips, right? 12 pips, 67 pips. You know that this moves more in London session. So I would say Euro USD, I would add them all up, or count how many, not add them all up, but I would count how many. I would go back until, like, I don't know how far. I would go back as far as I can to know how many pips average does my pair move. This is how you back test and how you know how many pips your pair actually goes in during London and New York session, right? So I would say Euro USD moves between 40 to 50 pips in New York. I mean, I'm sorry, in London. Actually, it moves 40 to 50 pips in London. So that means I know that I can for sure catch 30. You don't want to catch the whole 40, 50. You don't want to aim for that. You want to catch what you can for sure make. I can for sure make 30, 40 pips off Euro USD on a London session. So you know, this is how you study your pair. This is how you study the market. This is how you study how to trade, how to back test. This is how you actually learn your pairs and to know which pair you like the most, right? So if you know this, then you know how to trade. That's a little sauce for you, you know. This is how I would trade in the beginners. If you were a beginner, that's how I would have done it. If you haven't used it, use it now. But you guys have an excellent morning. It's 9:50 Eastern Standard Time. You guys definitely DM me if you have any personal questions or have any questions at all. Make sure that you guys follow me on Instagram and let people know on the UTH chat that they missed out on this training. They missed out. Let them know that they need to be on this next training. This training is huge. Oh, in Hawaii, it's 3:46 a.m. Man, that's crazy. You a trooper. So you guys have a great evening. You guys let me know if you have any other questions. And I will go ahead and post this recording as soon as possible. Peace.